Car Gap Insurance Explained. Gap insurance, which stands for Guaranteed Asset Protection, is a type of car insurance policy that covers the difference between the actual cash value, the ACV, of a vehicle and the balance still owed on the financing, car loan or lease. Hi, I'm Kevin Hunter, the Homework Guy. I got fired from the last dealership I worked for being too honest. The owner said, "My managers don't know how to deal with your customers." What he meant was that dealer managers don't like prepared customers, and I did just as much to educate a car buyer who was my customer as I do to help millions of people here online. Being fired from the car business for being too honest is something I wear as a badge of honor today. Since 2009, I've been here on YouTube helping car buyers just like you, and no dealer owner will ever have the power to silence me. Today, I'm going to teach you about a type of insurance most car buyers have interfaced with and likely bought on your last vehicle. If you don't put enough money down on your vehicle purchase, you may need gap coverage in the event your car is totaled or stolen. To avoid gap insurance expense, I have always advised people to put at least 20% cash down and pay for taxes, title, and license fees too out of pocket. That's how you avoid the expense. Gap insurance is particularly important in situations where the depreciation of a car greatly outpaces the repayment process of the loan, like zero down deals and longer term loans. Here's a closer look at what gap insurance does. It covers depreciation. Cars depreciate rapidly, often losing 20 to 30% of their value in the first year and about 50 to 60% or more over 3 years. If your car is totaled or stolen, your vehicle could be worth a lot less than the loan balance, and standard car insurance policies only pay out the current car's market value. In this case, gap insurance steps in to cover the gap between what you owe and the car's depreciated value if your vehicle is a total loss. Also offers loan and lease protection. If you have a car loan or leasing a vehicle, gap insurance can provide financial protection. Without gap insurance, if your vehicle is a total loss, you could end up owing more than your car insurance company is willing to pay. Negative equity coverage. For those who put a small down payment or have a long-term loan, a very bad combination as I pointed out earlier. The risk of being upside down on the loan, owing more than the car's value, is higher, especially in the early years of the loan. Gap insurance is particularly useful in these cases. Beneficial for leased cars. It's often required for leased cars because with leasing, you might have little to no equity in the vehicle throughout the duration of the lease. Offers some peace of mind. It offers peace of mind knowing that you won't have a financial burden or if your car is totaled or stolen and you owe more than its depreciated value, but you do not have to buy the overpriced policies available through dealer finance. You can get the same gap policy through a credit union for half that cost, and it's also available much cheaper through many different car insurance companies. Now here's how gap works. If your car is totaled and you owe $20,000 on your loan, but the car's current value is only $15,000, your standard car insurance will only pay $15,000. Gap insurance would cover the remaining $5,000. This gives you a paid-off vehicle. Gap is not a replacement for car insurance. It's important to know that gap insurance is a supplement to, not a replacement for, standard car insurance. It doesn't cover property damage, bodily injuries, or other liabilities. The policy duration. Typically, gap insurance is most relevant in the first few years of a new car purchase or lease, as this is when the gap between the owed amount and the car value is greatest. Cost and purchase options. Gap insurance can be purchased from car dealerships, but as I mentioned earlier, this is the most expensive option you have. You can also get gap from some banks or credit unions and some auto insurance companies. Prices vary, so it's wise to shop around and compare rates. In summary, gap insurance might be a smart investment for those financing a new car with a small down payment, those who have a long-term loan, or those leasing a vehicle. It provides financial protection against the big loss it's possible for you to see shortly after you buy your car. I hope you appreciated this brief but concise explanation of gap insurance. To get access to tons of other free car buyers resources, visit our website, thehomeworkguy.com. Our car buyers blog is just loaded with information you need to know. There are well over 20 blogs for you to read and more being added regularly. They're there for you to learn from and find out how to become a smarter car shopper. You can even print them off, put them in a 3-ring binder, and take them to the dealership with you, just like our viewer, Joe Lepore, did. And for this show today, if you want to read it to better understand it, the full transcript of this show is also among the great car buyers blogs at the link appearing on the screen, and that link is in the description box down below. I'm Kevin Hunter, the Homework Guy. Thanks for listening, and please share this show and some of your other favorite shows that we've done with family and friends. Everyone deserves a break, and there's a lot of misinformation out there pertaining to gap insurance. I've got to go.
You can't go!